Hey everyone, welcome back to Corporate Decoder, the place where we peel back the corporate curtain and see what is really going on under the hood. Today we're diving into an 8K filing from Boral Acquisition. Corp, a company that is essentially raising money to go find another company to buy. Think of it as a blank check to make a deal happen. So what is the big news in this filing? Well, Boral Acquisition Corp, also known as the company, just wrapped up its initial public offering or IPO. This is a huge step for them because it means they've successfully sold shares to the public and raised a significant amount of cash to kickstart their search for a business to acquire. Now, these filings with the SEC, the Securities and Exchange Commission, are super important because they give us a peek behind the curtain and tell us exactly what happened during that IPO and what agreements are now in place. It's like getting the official handshake on a major deal. This particular report talks about the company's IPO and the agreements they've entered into as part of it. We're talking about the nuts and bolts of how this whole operation works, from selling units to setting up trust accounts. Let's break down what they're selling. They sold units, and each unit is a package deal. It contains one Class A ordinary share, which is a piece of ownership in the company, and half of a redeemable warrant. A warrant is like a coupon that gives you the right to buy more shares later at a set price. So they're selling units that bundle shares and these warrant coupons together. The IPO itself was a big deal, raising a substantial amount of money. They sold 28,750,000 units at $10 each. That brings in a massive $287,500,000. That is a lot of dry powder for them to go hunting for their acquisition target. With any IPO, there are always key agreements to sign. One of the most important is the underwriting agreement. This is the deal between the company and the investment banks that help them sell the shares to the public. It lays out all the terms and conditions of that sale. Then there is the warrant agreement. This document specifically addresses those warrants we talked about, the ones that give holders the option to buy shares later. It explains how those warrants work, including the exercise price, which is $11.5 per S-share. A really crucial part for these types of companies is the investment management trust agreement. The money raised from the IPO is usually put into a trust account. This agreement outlines how that money is managed and when it can be accessed. It is all about protecting the investor's money until a suitable acquisition is made. And that is the key point about the trust account. The money stays locked up until the company completes its initial business combination. This means they have a limited time to find and merge with another company. If they don't, they usually have to return the money to the investors. This creates a sense of urgency for the company to make a smart and timely deal. Now let's talk about some special shares. The company also issued 2 million Class A ordinary shares to the representative of the underwriters. These shares come with some restrictions. They can't be easily sold or transferred for a period of time, and the representative has waived certain rights like redemption rights. This is pretty standard practice to align interests and show commitment. Beyond the financial machinations, leadership changes are also a big part of an IPO. The company appointed several new directors to its board. This often happens as a company goes public to bring in new expertise and meet regulatory requirements. We see names like Luisa Ingagiola, Jeffrey Tullman, George Colatides, and Kevin McGurn joining the board and filling key roles on committees like the Audit Committee and Compensation Committee. To protect its leaders, the company also entered into indemnity agreements with its directors and officers. This basically means the company will step in to cover the legal costs and potential liabilities for these individuals if they face any lawsuits related to their roles. It is a way to ensure they can confidently lead without undue personal risk. There were also changes to the company's foundational documents, the amended and restated memorandum and articles of association. These are like the company's constitution, and they were filed with the BVI Registrar of Corporate Affairs. These updates are necessary to reflect the new public status of the company. So to recap, the company successfully raised $287.5 million through its IPO and a private placement of units to its sponsor. This entire amount is parked in a US-based trust account. This money is earmarked for acquiring another business, and it will only be released once that deal is done or under specific circumstances, like if they can't find a target within their time frame. The filing also includes press releases announcing the IPO pricing and the closing of the IPO. These are the official announcements that go out to the public and the media, sharing the good news and key details about the offering. Now, looking at this from a strategic perspective, Boral Acquisition Corp is a special purpose acquisition company, or SPAC. These entities have become a popular way for private companies to go public without the traditional IPO process. The main story here is the capital raised and the ticking clock to find a merger target. The success hinges entirely on the management team's ability to identify a valuable business and negotiate a favorable acquisition. The biggest risk for investors in a SPAC is that the management team might not find a suitable target, or that the target they do find might not perform well after the merger. The $11.5 exercise price on the warrants is an interesting detail. If the share price significantly exceeds this, it can create a lot of dilution for existing shareholders, but also a nice payday for warrant holders. In conclusion, Boral Acquisition Corp has successfully completed its IPO and is now armed with a war chest of nearly $288 million. The ball is in their court to find that game-changing acquisition. Investors will be watching closely to see if they can deliver a deal that creates long-term value. Alright, that is our breakdown of Boral Acquisition Corp's latest filing. What is your take on SPACs and their role in the market? Do you think they're a good way to go public or a risky bet? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps this channel grow, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description to continue the conversation. Thanks for watching. See you next time.